inflation expectation has changed fundamentally. That's also a driver of inflation. So I think we're going to see inflation. I think that is going to be I think there's going to be a more likelihood of stock market divergence. Some companies doing very, very well, some companies doing very, very poorly.
To talk about what investors might see over the coming months.
The emphasis of our strategy is owning these, what I call super durable, undisruptible companies, right? People are going to be ordering pizza and having it delivered, and they're going to eat it. And if for $8, you can feed a family of 4 with a pizza pie. That's a pretty good proposition. And you get it delivered in 28 minutes by a smiling person. It comes in a box that keeps it warm. That's going to continue. Hilton's stock was down the most, I think, of anything we owned when the pandemic was announced. We meaningfully increased our position in the company in the mid-50s. Stock today is 140. So when you own businesses that have very, very attractive economic characteristics, and they're largely not immune on a day-to-day basis, but they're protected from interest rates moving up or down, or commodity prices moving up or down. I think that maybe the single most important characteristic today is going to be pricing power. If the cost of your inputs go up, you better be able to raise price and not lose the customer. And that is true for every one of our companies. I think all of our businesses are going to report good results. And does that mean the stocks will go up? I can't speak to the next short period of time, but over time, as businesses report, the value of a business, the present value of the cash it generates over its life, a quarter report of strong earnings and cash flows and growth over a previous period is suggestive of growth in the intrinsic value of the business. And we don't think any of our businesses are undervalued. We think are overvalued. We think the opposite. We think they're undervalued. So undervalued companies reporting good results, stocks should do well, absent some, overarching macro or market development. And the other thing I would point out is Pershing Square Holdings is trading at about one of the widest discounts to net asset value. It's traded at, historically, it's approaching it's 28, 29% discount to NAV. And I find that just a remarkable, I don't know of other stocks like that, right? We own some of the highest quality businesses in the world. And you can buy them at almost a 30% discount of the price you see it on the screen by buying it through us. That seems anomalous to me. So I would think that discount's going to narrow. And that is something that can happen on a shorter term basis because, so for example, if we find a new investment for the capital that we've raised in this bond offering, and we announce a new investment that's interesting, that should remind people of the opportunity to earn incremental returns on that capital. So our strong preference is to find a business that's already doing the right thing with a management team we like at a price we like. And we've been able to find that in the last several years. Starbucks, prime example, Agilent. But even with well-run great companies, we can be helpful. And we are always looking for the next big idea. We don't disclose it until we obviously identify it. But I do think we don't need an asset target-rich environment to do well. We're going to make 1 or 2 new investments a year. That's kind of been the history of the firm. And we think we can find one of those in pretty much any market environment. Our one investment this year so far is Domino's Pizza. The other thing we did this year was this interest rate hedge, which has been up about 4-fold since we made the investment. And we're always working on new ideas, and I look forward to telling you about one after we're in a position to do so. But the sales stalling wouldn't be a reason for us to buy a stake in a company. What motivated us to buy a stake in a company is if we thought it was a really great business and it was undervalued, and if we thought the reason for undervaluation was fixable, whether we fixed it or the current management team fixed it. But our strong preference is just to work with the existing team. Another, I think, relatively strong year this year after a couple of extraordinary years. And I think Universal itself, while the stock's up nicely, maybe a third from the price we paid just when we closed on the shares a month ago, It's trading at about the same multiple as Warner Music, which is a controlled company, a more levered company, a number 3 player in the industry. Universal's grown at operating income at 21% per annum for the last 4 years. Warner about half that. We've got the best management team in the industry. We've got the most market share. So I think the market has yet to give Universal an appropriate premium. And that's one of our biggest holdings. And I think, again, that just takes time. So I think the biggest opportunity for value creation and purchase for holdings is the discount narrowing. It's just too wide here. I think inflation expectation has changed fundamentally. That's also a driver of inflation. So I think we're going to see inflation. I think that is going to be I think there's going to be a more likelihood of stock market divergence. Some companies doing very, very well. Some companies doing very, very poorly. Companies that can't pass through wage inflation and goods inflation to their customers are going to do poorly, if I'm right about inflation. So the better the business, the better it does, I think. And you want to own the best businesses in the world, in an uncertain world, in an inflationary world. If you're good or better than we are at trading commodities, there's probably a ton of money to be made. It's not what we do. The constraints are constraints, but they're driven by all the demand. And I think people are going to come back to work. People are going to be in offices again. So I'm generally bullish on the economy. And I'm more bearish on rates. Cryptocurrencies that are associated with what they call projects or business models that can justify fundamental value for a currency. So I think there's really interesting stuff going on in technology with cryptocurrencies. I do a lot of venture capital personally, and that gives me a peek into what's going on in the world. I think there's a lot of great developments, I do think we've had an unprecedented amount of fiscal and low rate support. It seems like this Delta variant. The statistics are looking a lot more favorable in our country and certainly in Europe, in the UK, and I think more broadly, I see a path through the virus. So, and we're going to have a world where people are really going to want to live again. And so I think you're going to see a big pickup in the service economy, hospitality, travel, people spending money. And so I just think that's a pretty strong backdrop. Low rates, well-capitalized banks, well-capitalized consumer, a desire to live again. We could have a very, very strong economy. I think we probably will. The emphasis of our strategy is owning these, what I call super durable, undisruptible companies. I think all of our businesses are going to report good results. And does that mean the stocks will go up? I think inflation expectation has changed fundamentally.